This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
What is up, everybody? Welcome back to another episode of Benzinga Live. And regional banks getting absolutely hammered again. The regional banking crisis is back on once again. Let me go ahead and pull up my Benzinga Pro. PacWest stock down more than 30% now at this point. Just a little over 2 hours into trading. The S&P 500 getting a little bit hammered too. The banks are taking down commodities like oil and other energy trades. So let me go ahead and get my Benzinga Pro pulled up. We'll take a look at some of these charts because things are getting a little ugly out there. Benzinga Pro. Other stocks we've been watching, of course, Apple getting ready to report later in the week, so that will be a big one for the S&P 500 tomorrow. Thursday, the Federal Reserve, the FOMC, will announce its next future funds rate decision. That will be the biggest thing this week in terms of market moves. But unpredictable QH moving, yeah. Oh, PacWest stock is actually coming back here a little bit, maybe. Let's see. Maybe I just need to reload this. Is this old? Let's see. For some reason, having some trouble here. Sorry, guys. Give me 1 second on this technical issue. Let me just check. I guess I'll just check Google for now while we get that figured out. Oh, yeah. PacWest stock is coming back big time now, baby. It got down to $5.50. It is now up 23% from the lows, still down 25% on the day. So again, so this is going back to last week. The First Republic National Bank shares got absolutely decimated, down to about $3 before finally JP Morgan stepped in, said it would acquire First Republic's assets, which I thought would actually stabilize the financial in terms of the banking stocks. But obviously this week that's not what happened. First Republic saw a significant outflow of deposits because First Republic was not that small of a bank. It was the 15th largest bank in the United States, but still relatively a smaller bank. So it saw a major outflow of people taking their deposits from First National Bank, and then instead of depositing there, saying, okay, we're going to deposit with JP Morgan or Bank of America or one of these bigger banks that are quote unquote too big to fail. The idea was that if you go with the bigger bank, they'll be a little bit safer. But we've seen this week, it seems like investors are a little spooked and that maybe they're thinking, okay, First Republic could be a signal that we're going to see this in other banking stocks across the spectrum. So that could help explain why you're seeing stocks like Pacific West Banking, Bancorp, PacWest Bancorp, Western Alliance, ticker WAL, Comerica Bank, right down the street here in Detroit, all getting hammered today. I honestly, I've been wrong about these basically for the past, since Silicon Valley Bank, where I've been using this as a buying opportunity to buy some of these regional banks, and a lot of them have continued to move lower. But I don't really think we're on the precipice of this huge banking crash that it seems like the market is reacting to today. I mean, I guess, time will tell, and I could be wrong. I hope I'm not wrong, because chances are that if we see more of these banks collapse, we'll see the overall market continue to move lower, which, we've been doing pretty well this year so far. Yeah, so just safer in general. I mean, some companies and stuff have decided to move to bigger banks. I mean, some companies I'm sure have decided to just go straight into T-bills and other things, but that's a good point. Let me see why I can't get my Benzinga Pro loading. Seems to be working in Safari, but not Chrome right now, which is causing me a problem because I'm streaming from Chrome, and that's where I'd have to broadcast the stream from. So, um, I don't know. What should I do? What should I do, folks? I'm gonna call Ryan Faluna, or I'll Slack him at the very least. Let me know in the chat outside of the regional banks what you guys are watching today. I of course mentioned that we were gonna have Apple reporting later in the week. All right, Ryan said log out and log back in. This is like the classic have you tried turning it off and on and back on it? I did try refreshing it already, which I thought was the first step. All right, Aaron Bree at benzinga.com. Password, I'm not going to tell you guys. Interesting. All right, sorry guys. I'm trying to troubleshoot this as quickly as possible. QH goes to 4 here. The Crow is saying, let's check in on QH. I don't even know what QH. Kuaho Limited. Kuaho. I'm not even gonna try to pronounce that. It's a Chinese company. It looks like. Market cap 21 million. So little micro cap Chinese stock. Y'all are getting risky with it this week. I know. Bud tap Bitcoin. How's Bud been doing since the whole marketing fiasco, we'll call it? Down about 4% this month. So nothing crazy, but that's still a decent move for such a big stock. Oh man. Look at this, guys. We're in trouble now. Might just have to use Google for now. See how PacWest is doing. Okay. Okay, PacWest coming back strong. Let's see if SPY is moving with it. And then a quick rundown on the show today. At 12:30 we will have Alex Monahan. He is actually a sports gambler that I follow on Twitter. He's going to be coming on and talking about some of his different strategies because he does things a little differently than what you might see from different people out there. Yeah, SPY coming back a little bit too, by the way, here. And then at noon, we are going to be joined by Blake Madgett from Containing Luxury, talking about the Airbnb space, the rental space, real estate market in general. So excited about that. Okay. Let's see. I mean, it seems like some of the fear has subsided with some of these stocks. I mean, Comerica, you can see up 3-4% from the lows. PacWest came back a little bit. Western Alliance stock up more than 10% from the lows. So interesting here to see, I mean, just a complete sell-off on all of these names. And now starting to come back. I haven't seen any specific headlines. I'd be surprised if, we don't see like Janet Yellen, she is the economic treasury secretary. And then we also have, FOMC tomorrow. I'd be surprised if we don't see some of those leaders coming out and kind of talking down, saying, okay, trust me, if you're a company and you have deposits at one of these banks, they're going to be safe. They're going to be okay. I'd be surprised if we don't see that at some point this week, especially if we continue to see these names selling off. Now, I was interested to see earlier back when Pac West was down like 30%. If this okay, and it looks like it has. So this move in the market today and what's been going on with regional banks has now increased the probability, at least according to CME's Fed watch tool, that we will see no rate hike tomorrow. Now, this could just be in a response to that the bond rates are falling today or something because of all this going on. I have no clue. But basically, the idea, my interpretation of this, looking at this, is I'm saying, okay, if Pac West continues to go down today, say down 40-50%, and it looks like some of these banks are on imminent collapse, then the Fed's going to be a lot less incentivized tomorrow to come out and raise interest rates. Remember, this whole problem with these regional banks has been because the banks were buying treasuries when interest rates were low. As interest rates go higher, that causes the value of those treasuries that the banks were buying to plummet. And that led to a big hole in a lot of these banks' balance sheets. What we saw with Silicon Valley Bank, what we saw with First Republic. Then once there's a hole in the balance sheet, then depositors are like, all right, I'm not going to invest in a bank that currently is down money. It doesn't matter that they just hold these bonds to maturity over the next 30 years, whatever, like they'll be fine. People are worried about who is in the best position cash-wise now when they're depositing money. So all of these banks, have just been getting absolutely hammered today. Seeing them come back a little bit. We'll see if Pac West... Pac West is running now. Pac West is up now more than 30% from its lows, up above $7. It was at $5.50 just a few hours ago. So full disclosure, I'm a shareholder of Pac West, and to be completely honest, I wasn't even like, I don't know. Like I said, I've been wrong on these for the past like month and a half. But I bought these as a long-term play. Basically, my long-term thesis is that these regional banks over time will eventually be okay. And right now they're trading well below book value, which I'm willing to take a chance on. I took a chance on FRC. I was buying chances of FRC just to get wiped out there. So I can't I'm not trying to take a victory lap, especially with the rest of the stocks getting hammered today. But, it's some of these stocks have had insider buys too, right? Like let's pull up our Benzinga insider trades tool here, this is a very, I love to look at this, especially when I'm looking at making a, kind of like a bigger investment, like a long-term investment, as opposed to just a trade. If I see that people were buying, let's go to Pac West stock first. So we get the filing date right here. So this is all within the last like 2 months. March 13th, CEO added 100,000. This guy, John Eggermeyer, sounds like a rich guy, added 338,000. Matthew Wagner, 300,000. Paul Taylor, 500,000. CEO. This is all in March 2023. So these guys are buying the stock, and they're buying it at $15. It's like half of that right now at $7. Some other regional banks. What about Western Alliance? Does that have any insider buys? And I know it's never as simple as like, oh, if they're all right, so a few insider buys. CFR. Colin Frost down in Texas. They were buying Colin Frost at 107. What's it at now? 101. There you go. No, I know, Jay, that we're gonna see a hike tomorrow. I think that's pretty much like for certain. I'm just saying that to see those odds start to increase because of what was going on today was interesting, because I think if shit continued to hit the fan, which it seems like it started to cool down a little bit, that would potentially change things for tomorrow. But for right now, it looks like almost 100% for sure we are going to see a hike tomorrow. Which I mean, like I think a lot of people are I mean 25 basis points. It's like yeah, let's continue getting inflation under control until we can get to a position where we can start talking about cutting rates, which we're obviously not there yet. All right, now Ryan's telling me to try to use incognito to use Benzinga Pro. This is really throwing me off not having Benzinga Pro, as I'm sure you guys can tell. There we go. All right, it works. So it works in incognito. All right, let's try this. There we go. All right. So Pac West, check this out here now. Now that we got the chart, let's go to a 5-minute chart here. I mean, yeah, it's pretty much straight down and straight back up. So we'll see if we can find kind of like an equilibrium at some point, or if this thing's just going to be crazy volatility all day. I mentioned Apple earlier. So we're seeing Apple report in 2 days on Thursday, May 4th, after the close. Star Wars Day. May the 4th be with you to anyone who celebrates that day. Let's take a look at Apple on the daily chart. This is a chart that's actually been looking pretty ugly to me. You can see just how many times we've tried to essentially cross this 180 line. Going back here to January 2022, that's when the market topped out before the big downturn. Then again over here, bang, once again in August, all the way back down to 124. I mean, this looks like to me, just a lot of overhead resistance. Bang, bang, bang. Basically 4 different points that we'd have to get through here on the upside. So I'd just be watching Apple if we approach up here to like 177, 180. And if it clears it and it's showing strength, I mean, after earnings and the markets, performing well, of course, Apple could make new highs. I think it's one of the strongest stocks of all time. But I would just be worried right now that we're going to see a little bit of another downturn before coming back up to those highs. Check back in on KRE. That's our regional banking ETF from Spider. KRE has come back a little bit with PacWest, but still down. Nearly 7% on the day. The S&P 500 SPY, as you can see, just took another leg lower on the 5-minute chart here. So we'll see if SPY can hold these lows here, right down at about 409 we're at right now. The lows got down to about 408, a little bit below actually, in the 407. So SPY opened the day at 414 and now down to 408. So anyone that was holding SPY puts today has been having a great day. I wish I was. I know hindsight's 2020, but I remember looking at the SPY contracts yesterday and thinking like, well, some puts looked decent and I didn't pull the trigger. So wishing, of course, that I had now. Checking in on Energy XLE. Down almost 5% Energy today. So, this was trading down with the banks. You typically see, you can see value trading together a lot of times. So the Dow trade down 1.5%. Berkby, I'm sure not having, the best day of all time for Berkby. Why does it not show me that one? Berkby, down 2%. So I think value in general just kind of trading down today, or financials and energy getting crushed. So let's see who else this week we have for earnings besides Apple. Of course, last week we had Facebook, we had Amazon. All right, so today after the close, we have AMD, big one for the semiconductor space. So we'll see AMD and Nvidia moving after the close for sure. We have Ford, we have Starbucks. Let's do a quick preview on all these. AMD, Starbucks, Ford. All right, so all trading down today. Let's start with Ford. I like Ford long term. I worry that right now is just not the best time. We've talked about this on the show before, but it's just very, very difficult in general for these car companies to make decent money in terms of, just the margins are very small. They're not profitable over time. If you look back at Ford's chart, we'll go to a weekly chart here and go all the way back. You can see that even at the time before COVID, when the market was making new all-time highs, Ford was down here. Ford was down at $9 while the rest of the market was making all-time highs, down about 50% from 2014. Of course, in 2008, the automobile industry was one of the only industries out there that was so dire that it needed a government bailout. So I think historically, auto stocks have just been a little bit difficult to really make money in over time. So I worry that right now is not the best time, but I still like Ford's long-term vision. I think it's going to do well with the Ford Lightning. But I wouldn't be buying it right here. Although from a chart perspective, it does look like for sure that we've found some consolidation, potentially found a bottom down here at about $10. And the other thing too, about buying it right here at $11 is if you set a stop loss down here at around $10, boom, like, you've got a pretty defined stop here chart wise that you can say, okay, this is my bottom. If it breaks through here, it's looking bearish. But if it starts coming back up, I mean, we could see this run back up to $20 easy. Now going over to AMD, AMD has been a leader basically all year. You can see, again, we're on a weekly chart here. Let's go back down to a daily chart so we can look at just this year's action. Going back to January 2023, that's where my cursor will be right here. AMD stock's just been a monster, up from like 65, $60, got all the way up to almost 100. So almost an 100% gain. I think Nvidia has seen an 100% gain. And this is, of course, on the heels of the rollout of ChatGPT and other AI technology. Because what do you need for the AI technology? You need these semiconductors. You need these computer chips. You need strong graphics cards or not graphics card, but computer processors. And Nvidia and AMD are leading out there. I like Nvidia is one of my favorite stocks. I have a bunch of shares of Nvidia. I'll probably never sell them. But would I be buying additional shares of Nvidia up here after the stock's up more than 100% on the year? Maybe not, just because, people start to take profits even if the investment's still looking good. So if some big fund bought 100,000 shares of Nvidia or 10,000 shares of Nvidia a couple months ago and has already made 20-30% on it, and it's enough for like their whole year, they might be selling some, they might be trimming some. So I mean, and as soon as interest rates even start talking about getting cut, this thing will probably run even more. So I've kind of had some FOMO that I hadn't added any additional shares of Nvidia when it was down at its lows, but at least I still have some shares. So so again, just running down, we're going to have a special guest today at 12:30 p.m. Eastern here in about 30 minutes. Alex Monahan will be joining us. I'll drop his Twitter in the chat. He's got more than like 60,000 followers on Twitter. He's tweeting out some great parlays. Cool site that he's working with too. So we're going to talk to Alex about his different strategies and whatnot. So if you've got any sports betting questions, get him geared up in the chat, ready to go, because he's your expert, not me. So yeah, going back to Apple, don't love the chart into earnings. I do know, it seems like the stage is set. Or I'll put it this way. It seems like the bar's already been set pretty highly for mega cap tech stocks. If you look back to Amazon's earnings or Meta's earnings, where they kind of blew it out of the water. So that's why I also don't love Apple into this report on Thursday. And I know historically that Apple's, loved earnings season, essentially always done really well reporting earnings. But because the bar's already been set high, unless Apple, like the way I see it, unless Apple absolutely crushes it, I wouldn't be surprised to see the stock sell off a little bit. So that's why I would just rather sit on the sidelines, wait. And guess what? If it does, if Apple reports a decent quarter and the stock sells off just because it wasn't as good as Meta's or as great as Amazon's, I'll treat that as a buying opportunity. So I'll pretty much treat any weakness in Apple's stock outside of a material change in something about the business as a buying opportunity. Because even if people have a little bit less income to spend going into the summer, into 2024, I mean, Apple products have now crossed the threshold from being a discretionary item to being a necessity. People need their MacBooks for work. People need their iPhones for daily life. So obviously sales will drop a little bit if we go into a major real recession. But I think Apple, I mean, Apple's one of those companies that will make it through essentially anything and has more cash on hand than any other company in the world. So if we do head to a recession, I would expect Apple to manage that money well and maybe take it as an opportunity to look at some companies, acquire something. So I'm never really worried about Apple long term. I don't want to sound too bearish on it. I just don't love it into this earnings report for a multitude of reasons, including the fact that the chart doesn't look great, and B, the fact that the bar has already been set really high. And I'd be saying the exact opposite thing if Facebook and Meta's earnings were both disappointments and both those stocks were trading lower after earnings. I'd be saying well, now the bar's set lower for Apple. All Apple has to do is put out a decent quarter and its stock will go up. No, Meta blew it out of the water. Amazon did really well, and Amazon's stock was up 10% after hours and then gave it all back. Investors, even with Amazon's blowout quarter, decided that they didn't love it, I guess, and the stock came down. Apple would have to essentially just crush it with earnings to I think impress Wall Street at this point, because I think even with great earnings, you have to remember that earnings are looking in the rearview mirror. If we're looking at Q1 earnings of this year for most companies, that's January 1st through March 31st. So we're not even talking about 3 months. We're not even talking about April. So if if you're just looking at earnings, you're looking at what happened in the rearview mirror. That's why it's oftentimes more important when a company gives guidance or talks about the future. And so, right now, I think even with blowout earnings, the market's saying, okay, well, even though you guys had a great January through March, we're expecting the economy to come down. So for Amazon, that's not good news. For Apple, that's not good news, whatever it is. I don't think we're not in the macro environment to where if a company puts out a slight beat, you're going to see that stock go up 5-10%, especially for these stocks like, Apple, Amazon, etc. Another stock, speaking of earnings that reported yesterday, Chegg, down 48%. So if you're unfamiliar with Chegg, you're probably not a college student. So Chegg is a company that is it's supposed to make, college courses, maybe high school courses too. I don't know. I never heard about Chegg until I went to college. But basically, it's just like a site, a subscription service students can pay for. You get like access to notes for certain classes, sometimes even quizzes and whatnot. Basically, the idea here, Chegg down 50%, is that ChatGPT will essentially decimate Chegg's value, that students can essentially just use ChatGPT for free instead of using Chegg. The other thing that like happened when I was in college was like we'd be in a class with a bunch of people and like one person would have a Chegg account and just share the entire account, or just like, access the quizzes or whatever, the lecture notes that were on Chegg, screenshot them and then send them into like the group message with everyone in the chat. So to me, like, I don't know, the business model just never seemed that great. I'm not really surprised to see Chegg get absolutely hammered here. But what I think will be interesting is that if we get in this environment again, which it looks like, at least over the past, some of these SaaS and kind of growthy names, we're getting some love here for a little bit, right? Like ARK was having days where it was outperforming the market a couple months ago. I'll go to ARK's chart just to use this as like as a gauge for growth. Also, before I guess here, I'm gonna grab a glass of water real quick. 1 second. I'll be right back, squad. Watch this video, or watch this. This message is brought to you by Benzinga Pro.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.
All right, y'all. We are back and about it. So, yeah, ARKK now trading at, let's see, $35 a share. You can see here on this chart at the beginning of 2023, ARK was doing pretty well. Some of these growthy names were actually performing not too bad. And again, I don't know if I don't think Kathy's in like Chegg or Asana, or really, I don't know if Kathy Wood is in a lot of these, like business SaaS plays, like your Asanas, whatever. She's in more like, I don't know. I feel like her like it's more like medical based. Like she's in like Teladoc, obviously, and then like the genetic editing. Big into Tesla, big into Roku, but I don't know if she's in any of like the Asanas or Salesforce or any of those. But either way, my point is these stocks have given up all their luster that they started 2023 with. They started out really hot. They're like a racehorse that if 2023 was a horse race, that they started out super hot, but a lot of times in a horse race, it's not the horses that start out super hot. They start to slow down, and then ones catch up. They've started to kind of slow down here. But I'm starting to look at some of these, and here's what I'm going to do is I'm going to look at the ones that were performing really well during this time that growth was doing well, and seeing, okay, if Asana gets back down to essentially this low here, say like 12 bucks, I'm going to go long because I think when the market does turn around, then we could be waiting until the Fed starts cutting rates. It could be tomorrow. It could be who knows whenever the market actually bottoms. I think a lot of these growth names that are down 80+% are going to be your leaders on the way back up. And we've started to see that with NVIDIA. And I think NVIDIA, I mean, if you took Chat GPT away and AI away, I mean, NVIDIA would probably be trading down here at about like 170, I'd imagine. Right? It might have like still gone on this little like, growth run at the beginning of 2023, but then came back down. I think NVIDIA is basically define the odds of the market, if you will, going against what's going on macro wise, specifically because investors are looking at this AI investing opportunity, this inflection point that we're in right now in the early stages of this technology as like an internet changing play, like investing in Google in 2000. I think like people are viewing this opportunity as just too big to pass up. And I'm not saying that I think NVIDIA is the best play in the AI space. I think that investors are viewing Microsoft and NVIDIA as like the two maybe most safe or quote unquote, or not quote unquote, but like basically obvious ones. So NVIDIA is safe in terms of as the industry of AI grows, so will the need for more semiconductors for computer processors. NVIDIA's is essentially the leader in that space. And B, because NVIDIA also has revenue from all these different business verticals, right? It's not just dependent on the AI. So if you were betting on some random AI stock that was solely AI, and then a bunch of regulation comes out and there's regulatory concerns and AI stocks start crashing, NVIDIA's might hold up because, again, it has all these other things that you need the NVIDIA products for outside of just AI. It's not like a single product name. Google has been getting a lot of attention. So Altimeter, I don't even know if I'm saying that right. Capital, dude, what's his name? Brad Gertzner was on CNBC yesterday talking about selling Google stock after being in it for years and years and years. And essentially his reasoning was that Google has fallen behind in terms of AI, that its Bard product holds no light to Chat GPT, and that it was basically unacceptable to him, the fact that Google has fallen so behind in AI. I mean, Google acquired DeepMind, a company focused in AI, back in 2014. That was almost a decade ago. That was almost 9 years ago that Google acquired the company. And it's pretty much, it's crazy that Google, with all of its resources, all of its technology, all of its money, could not get AI at least to a competitive spot with Microsoft and ChatGPT. I understand one might be the leader, especially on rollout. And I think with AI and with artificial intelligence, it's one of those things that's going to start getting exponentially better very quickly. But the fact that Google's is so far behind ChatGPT, I think, is frustrating to a lot of investors. For me personally, like like Altimeter Capital, the guy that runs this hedge fund, I'll drop the article in the chat, has already made a bunch of money on it. I'm in a different position, right? I might use this as an opportunity to buy Google if the stock continues to go down on kind of the AI concerns, or the concerns that AI isn't, that great, that Google's AI platform. If like Google's stock continues to get hit compared to Microsoft's, I'll use that as a buying opportunity because it's so early stages that I'll say, okay, over time, I'd expect Google to come back a little bit and bring out a product that can compete with ChatGPT. If not, I mean, Google could be in trouble. I've been getting so many spam calls recently. It's insane. And there was a special there was a setting that you could turn on that blocks all calls from a number you don't have saved. And so I had that on for a while. But then I was missing like business calls from like random people because of course I'm not gonna have like some random inbound call from some company number saved if I've never talked to them before. And so I was like missing not super important because here's the thing. If any call is that important, someone's calling you from a number you don't have and you don't want to answer it. If it's that important, they'll leave a message. Jesse's asking AB, did you happen to see or hear about AI Joe Rogan and AI Trump having a conversation? No, I didn't see that specific one. I don't think I've seen a bunch of videos of different people using AI to create like funny videos with a Trump voice or Rogan voice or whatever, and they're usually pretty funny, but I don't think nothing too serious, I don't think. Banking crisis, is this all retail's fault again too? No, I don't know who we can blame on this one. I think we can blame people that are pulling money out of these banks because they're scaredy cats. But at the same time, you can't really blame them because some of these banks were pretty negligent in terms of how they were handling their balance sheet. Like I think going back to Silicon Valley Bank, because that's the one we just know the most about because the collapse happened now the longest ago compared to First Republic, which collapsed like last week. I guess Signature Bank maybe even collapsed before Silicon Valley, but Signature Bank was so crypto focused that Silicon Bank to me holds more weight. But going back to Silicon Valley Bank's collapse. Going back to Silicon Valley Bank's collapse. The balance sheet was caused by the raise in interest rates. We talked about this before, and the bank didn't really do a good job hedging against that. So again, I'll try to explain this in the most like layman terms possible. So Silicon Valley Bank, first of all, got a huge amount of deposits during 2020 when money was super cheap, interest rates were at zero, money was just flying around in the VC world, right? You had all these different tech startups, say, like 10 different Instacart competitors. There was a million different apps for just grocery delivery, right? Raising money. Basically, all these companies, all these startups were banking with Silicon Valley Bank. So all giving money during the same time period when interest rates were at zero. So Silicon Valley Bank is getting all this money. Banks don't just sit on cash. So Silicon Valley Bank started buying treasuries around this time. Again, we're talking about 2020, 2021, post-COVID markets when things were getting really crazy with essentially free money just flowing around in different areas. So then, as interest rates started to go up, all of these bonds that the banks were buying when interest rates were at zero became worth less, right? If you want to sell a bond on the open marketplace and it's offering to pay, say, 1% interest rate, and then someone comes along and offers the same, time duration bond, say a 2-year bond instead of 1%, here, I'll give you 2.5%. Which one do you think people are going to be willing to pay more for? The 2.5%. So as these bonds started hitting the market that had a higher interest rate, the bank's holdings started to lose value. This, to me, and this is where I guess I was kind of wrong, to be honest. To me, that was like specific to Silicon Valley Bank because it was all these types of companies, the high growth, techie startups that were depositing money that needed money out at the same time when interest rates started to get up. Other regional banks don't work exclusively with tech startups. So A, their clientele was depositing less money at the time when interest rates were actually zero, and B, had less of a withdrawal pressure. What I've been wrong about is I think just the fear in general sparked from that Silicon Valley Bank situation has now led to deposits slowing down in other regional banks. Yeah, I don't know. I guess I always say this word wrong. I didn't know that until Raz does not like it, so I've been trying to get better at it. But silicon. Um, no, I'm not trying to. I'm not trying to make excuses for extremely poor management. I'm saying Silicon Valley Bank like got screwed with, or they screwed up by not hedging that. Like there are ways to hedge against that happening for a huge balance sheet being created in, or a huge hole in your balance sheet. Which I've talked to people about that. Why didn't they hedge? Well, some people think, well, they thought we were getting to the end of the interest rate cycle. They could hold off until that happened, and then they'd start seeing like some deposits. I don't know. Either way, I'm not saying that I'm saying that Silicon Valley Bank was not necessarily at fault for what happened overall with interest rates, right? That's not up to Silicon Valley Bank. It is at fault for how it handled that move and for not hedging that position. What up, AB? When AB on the street, we're gonna find some different type of like events and stuff where there will be a lot of people out to hit man on the street, like to get a bunch. What do you mean, no way, AB? Can you imagine not hedging, then complaining and getting bailed out? Yeah, but Silicon Valley Bank didn't really get Silicon. Now I forget which one it is. Silicon. Silicon Valley Bank didn't get bailed out. It's like depositor. It's the people who held money there did. The bank itself is gone, right? Like they're not in existence right now, I don't think. So they didn't get a bailout like oh, you're talking about FRC. Yeah, I mean FRC. I don't know if FRC. They didn't necessarily get bailed out because now JP Morgan owns them. They're gonna be there. JP Morgan owns First Republic's assets. We'll see if First Republic goes back to operating how it was before. I'd imagine it's under like new management under JP Morgan now. Less regulation on the small banks means riskier investments. Well, it's funny that you say that, Raz, because our other Raz disagrees. Less regulation. Yeah, I mean, it's interesting because like in quote unquote riskier investments, they were buying like bonds, like treasuries that just happened to lose a lot of value after interest rates started to go up. JP Morgan made out like a bandit yet again. Yeah, isn't that like getting back to JP Morgan's roots? I mean, wasn't the like OG JP Morgan, didn't he like bail out the entire banking industry in like the early 1900s? I got to brush up on my banking. Yeah, I mean, who really loses as like a consumer? Like I don't think anyone that was a depositor at First Republic, at Silicon Valley Bank, at Signature. I don't know about Signature Bank because again, that was more crypto focused. So I'm not too sure what really went down there, what's going on there. But I'm pretty sure all depositors at these different banks, at FRC, at SVB, are all going to be made whole. So it's like, the banks themselves get a little bit screwed. I don't know how much like your everyday consumer is. I don't know. I mean, to be honest with you guys, to be completely honest, I have like my whole life savings, every single like cent that I own essentially with that is in Comerica Bank right now. And I mean, last time I checked, this one was down 14%. Okay, so it's down only 10% now. So looking at the 5-minute chart, Comerica's coming back a little bit. But there was a part of me that's like, yeah, that's not good to see the bank where that holds all of my money and assets is down 10%. Now, here's what I don't know is, okay, so obviously you have FDIC insurance, but I don't have cash at Comerica, right? I have like an investment account with a bunch of stocks. So say worst comes to worst and Comerica's stock absolutely collapses. Do I still own my shares of like Apple? Like, or would Comerica have to sell those shares of Apple? Like, I have no clue. I have no clue how this works. I don't want to. I'm not gonna feed the fodder and like be part of the problem and start, thinking about pulling my money out of Comerica. But I'll be honest with you guys, like, just it's kind of jarring seeing the bank that you have all your money at, and their stock is down 10%. Like, is my bank okay? Again, I'm not gonna do anything about it. I have no action item. I'm not gonna, transfer my account from Comerica to a bigger bank or do anything, but it is a little scary. I'm not gonna lie. Like, it's not something you want to see. You don't want to wake up in the morning and see that your bank is down 10% on the day. I mean, to put it into perspective, Comerica's market cap is, let's see. Comerica's market cap is 5.6 billion. So 10% means about 500 million in value, just wiped away. 500 million, poof, gone from Comerica's value right now. Not a fan of that. Urban saying this is the end of regional banks. Yeah, so I'll be honest to this point. I'll speak to this point. This is the end of regional banks. I do kind of feel like, and this could be me just being like a dumb, naive, mid-20s-year-old person. I do kind of feel like regional banks are like a thing of the past, like older. Like if you're like a older company or whatever, and you are investing, like say you're like a Detroit small business and you're investing in, or you put your money into Comerica or like a regional bank, whatever. I think younger people are more and more just going to use the big names, right? Like they're going to use the JP Morgans, the Bank of Americas, etc. Is it possible that switching to CBDC would eliminate the regional banks? Yeah, I mean, as much as regional banks have lost trust among people over the last few months with everything that's happened, I think crypto lost a lot more trust than the regional banks did. Although you are seeing crypto come back probably on the heels of this as people get worried about the overall banking system, people buying Bitcoin, people buying ETH. I mean, ETH and Bitcoin both having pretty strong days today, up about 2%. But I do worry that, or I guess I would worry if I was like a big buyer in these regional banks over time, that, younger people's habits are going to change with banking, and that like, even if you're a business owner or you're like a mid-20s year, whatever you are as a younger person and you do everything on your phone, you probably don't have a lot of incentive to go bank with, East Michigan Bank Corp or whatever, right? Like people probably just find the ease and the comfort of going to one of the big banks, a Bank of America. So if that is true, AB, that goes against SoFi. No, because I mean, I think like that's what I'm saying is I think like SoFi. I'm not saying SoFi specifically, but a SoFi type of bank is one that I see more young people banking at over time than, again, like your regional. Well, I mean, there's literally hundreds of them, right? Like East Michigan Bank, like here, I'll just pull up a list of the KRE holdings from ETFDB, and you'll see what I'm talking about. So holdings, yeah, like New York Community Bank. I was hoping to find more of like, but like Eastern Indiana Bank, South New York Bank Corp, right? Like, I think young people are going to bank at those type of banks, just less and less. And more people are just going to go with the bigger names, your Bank of America, your JP Morgans. And maybe it's just because of like the ease, the apps on the phone, it makes it easier. But I could see a SoFi type, kind of taking that hole in the market. But I've long said about SoFi, and let me pull up SoFi's chart just because I have not looked at it. And SoFi is not going to get grouped in with these other regional banks, but it's still getting hammered today, down 12%. My biggest like red flag about SoFi is SoFi's whole thing. SoFi's whole like marketing, like mission essentially is that it's, banking for young people. It's like all digital. You can do student loan, whatever you need. All your needs. It's trying to market itself as like the bank for young people. And I don't know a single person my age or younger or older for that matter, like in my personal life, any friend, family member, like anything that uses SoFi, which is just a huge red flag to me. Like, how am I going to invest in a stock of a company that I'm in its main demographic and I don't know a single person that uses SoFi as their bank? I know someone that uses Venmo as their bank. They literally don't have a banking account and they have a Venmo debit card, a Venmo credit card, gets their checking or gets their paycheck directly deposited into their Venmo account, but does not have a bank account. I'm like, how do you go through life without a bank account? They're like, well, I got Venmo, and it's all right. Well, shit, if it works. I know more people that have Venmo as their bank account than I do SoFi. So to me, it's always just been like, maybe I'll get interested about buying some SoFi stock when I hear about people using SoFi's app. I use SoFi and Venmo isn't an actual bank. Yeah, 100%. Like, if you have SoFi, you have a legit bank account. If you have Venmo, you do not. But I don't, again, my point was I don't personally know. Now I know, I can say I know Dakota Gregory Chadswick Duckingsworth IV. He has a SoFi account. That's the first person I know now that actually has a SoFi account. But all right, guys, I see our guest of honor hanging out backstage again. So we are going to get into something. So we're typically obviously talking about, by the way, I'm not just like double fisting coffee up here. I've got a coffee and a water. I forgot my water bottle today, which I've found to be a very big problem, that if I don't have my water bottle, like my specific hydro flask, I will just neglect to drink water all day. So I've been here at the office since like pretty early this morning, drinking coffee, just going about my day, and then realized at like noon after I started the show that I legit hadn't had a sip of water all day. So I started to feel a little weird, and I was like, probably because I haven't drank water. It's probably pretty important. So I got a cup of water. This is my older coffee in the other glass. But anyway, I don't know how we got to there. Probably because I've been drinking water and my brain's not working well. But we're going to be talking about something a little different today than we normally do. We typically stick to stocks, some crypto usually. But we're going to be talking about some sports betting this afternoon. And I've got with me today, hanging out backstage, Alex Monahan. Hope I'm saying that right. Who I've been following on Twitter for a while now. And if you're like me, and you're sports gambling, you're always trying to kind of find that next edge, kind of figure out, okay, I'm not just going to pick like one game or one pick. I'm oftentimes building parlays and trying to figure out where I can get an edge. And that's why I like Alex's account, and I'll drop his Twitter. But without further ado, let's go ahead and give Alex our very special Zinger Nation welcome. And we'll be getting to some sports picks when we come back. What is up, Alex? How you doing?
Hey, how are you? Can you hear me okay?
Yeah, I can hear you great. You look great. Thanks for hopping on the show with me today.
I got my water too. I was hoping there was something else in your cup, but I guess.
Man,
well, water and coffee right now.
Not right now, but I'll tell you what. If we build some, parlays or take some bets and they hit, then I'll definitely have to have a celebratory glass on the next show. But before we get started, first of all, where are you joining us from?
I'm from Virginia initially, so I'm currently just back at home for a bit. So I'm usually in New York, but right now I'm back at home in Virginia.
Hell yeah.
So super exciting. I know.
So yeah, well, I'm from Missouri originally, so I mean, pretty much anything is more exciting. I'm in Michigan now, so I'm, been in the Midwest basically my whole life, so I can respect pretty much any part of the country. But before we get started, Alex, I'm curious about your background, just in terms of like, how did you like get into betting? You know, do you like? I think you have more of like a statistical, like mathematical background. Is that correct?
Yeah, so I was a trader actually for 3 years before kind of taking the full plunge into sports betting. So I worked at Susquehanna, which is just a trading firm in Philly, Bala Kinwood. So worked in trading, always loved gambling, poker. Kind of led me to trading when I left school. Didn't really want to do anything else except trade. Thought it was kind of gambling other people's money. So I thought that would be fun. So I did that for 3 years. So that's kind of my background, trading, that type of stuff. Markets.
Hell yeah. What do you? I mean, like, there's obviously like a big crossover between people who like to trade and people who like to gamble. Do you think that's just like, a healthy risk appetite that leads people to enjoying both things?
Yeah, like what I mean, I was working at a trading firm in, Pennsylvania, and Pennsylvania and New Jersey were, I think, the first two or maybe two of three states to like legalize sports betting or regulated sports betting. Obviously, you could bet on sports before, but I mean, it was, talk of the office, like people who, want to show up to work and trade stocks, find an edge, like huge overlap with sports betting, the types of things they find fun, risking capital to make money, right? That's what trading is all about. That's what sports betting is all about. And the similarities are, I mean, pretty crazy, right? You're buying, you're selling companies, you're buying, you're selling teams. The underlying concepts, a lot of them apply.
Yeah, I mean, the way I view it is like, okay, if I'm buying like Apple stock or S&P 5, SPY right now, like that's not really to me. I mean, maybe some people, like, obviously if you're buying a stock, they have inherent risk. They're speculative assets. But I wouldn't consider that gambling. But like if I go out and
Yeah,
buy SPY options tomorrow that expire tomorrow, like that's when I'm like, okay, like now I'm basically just gambling, like, right, like take a coin flip, is SPY going to be up or down tomorrow? I'm betting on up
exactly.
or whatever. So
Exactly.
I, as a gambler, have been drawn to option trading, which I'm sure a lot of other like more gamblers have, compared to just traditional like stock trading.
Yeah, exactly. Yeah, I was a derivatives trader, so lived and breathed options for 3 years and loved it. And it's very similar, kind of as you mentioned, very similar. It's not like, yeah, I'm not saying sports betting is like, oh, you're buying an index fund and you're holding it, but like buying options, buying, weekly calls, something like that was very similar to sports betting. So I think, you know, just kind of got immersed in sports betting once it legalized. Big money
Yeah.
came in, lots of ads, lots of people signed up. Then it was just kind of talk of the office, right? Less about where you going to dinner, more about what bets you got on. You do this, whatever. So got really into it there.
Yeah, and I mean, like, in terms of options, like, are you still do you still trade just like in like a personal account or?
No, not really. I mean, also it's just yeah. No, I don't currently really trade since since kind of getting fully into sports betting. I mean, I liked it more than my job. Ultimately, kind of led me to leave. But yeah, I don't trade much anymore.
Got it. But yeah, I mean, so like I always tell people, right, if they're, not, if they've never traded options before, they're just trying to get into it. I'm like, basically treat it like I have a strictly options account, and I basically treat it like it's my, DraftKings account. Like I don't bet with any money that I wouldn't be okay with losing. I don't buy options with any money that I wouldn't be okay with losing. And like there are, and a lot of options traders like get not mad, but they don't like, I guess, like they don't like that characterization, because of course there are ways to trade options in like a lot less risky, like safer way. But how I like to trade options is certainly a lot more in line with a gamble than it is with like a sound investment
Yeah.
strategy.
Yeah, exactly. Exactly. And I mean, it's kind of similar in sports betting, right? There's people who like the big payouts, kind of like buying some crazy weekly calls, and then there's people who like the low risk stuff, betting on favored teams, less of
Yeah.
them, but like covered calls or however you want to think about it.
Exactly. Like exactly. Like there's so many similarities that like even in betting, right? You can like find strategies that people are like, yeah, I'm just hitting singles. Like I'm not going for the home run. If you follow this strategy, you're going to win like whatever, have a slight, but you're not going to make, whatever. I like a mix of both. And I think from what I've seen from your Twitter page, you do too, where you're willing to like take a flyer, kind of like a long shot parlay, like here or there. Like it's worth it to try to like go for those home runs sometimes. But then also like go for some like high probability bets.
Yeah, totally. I mean, probably similar to the best options traders. There's some stuff that just has higher payout, but you think the probability justifies the trade, right? Even if the payout's going to be crazy or whatever, and then there's sometimes a little bit of a safer bet or whatever makes sense. It's just all about the probability and kind of like the risk justifying the reward type of thing.
Got it. So so you were working as an options trader. Sports gambling gets legalized in your state. How do you like initially start? You just start like tweeting about sports gambling and start growing a following there?
No, no, no. So, I mean, I worked, probably since sports betting legalized. I was there for a while. So I've been betting. I think sports betting first legalized in 2018. So it feels like a long time. But obviously the states have kind of fallen slowly. But I just kind of did it recreationally. I mean, a lot of people at work talked about it, at a trading firm, unsurprisingly, a lot of good gamblers, poker players, stuff like that. So kind of really started to learn like how do sports books work, what's interesting about sports betting, what are some strategies to make money, what are the similarities to markets, arbitrage, right? What are like these concepts, you kind of learned about as you start to become a trader. You learn about them kind of as a sports bettor, and then ultimately made the plunge into sports betting full time, I guess 2 years ago approximately now. um yeah, with odds jam, and just kind of have been there since, and really haven't looked back. Kind of get my high in a different way at this point. No longer going into work and trading, but betting on sports.
Yeah. So, tell me about what odds. Tell me about Odds Jam a little bit because I'm familiar with the site and some of the tools, but some of our audience may not be.
Yeah. So kind of what's really interesting about sports betting, and I think what fascinates a lot of traders, or at least traders I worked with initially, is all these books set prices independently. So like you think about the price of Bitcoin or whatever. Maybe it's 25K. I'm not sure. I haven't checked the price in a while. But like, you're not going to be able to buy it for 20K on Coinbase, and then you're going to get a different price, 30K, on another platform. Like the markets are pretty efficient. Um, Whereas in sports betting, like all these books completely try to set lines independently. FanDuel, DraftKings, BetMGM, so they all have different odds, right? If every sports book had the same odds, we wouldn't need the hundreds of them, I think, are in the US. BetMGM, Caesars. I mean, there's a long list. So all these books, they come in, they get their own data feeds, they get their own models, they all try to set prices independently. So the markets are very inefficient. So kind of the whole premise is like, as a sports bettor, what's really weird is like, if you think about a bank account. I mean, I was listening kind of before the show, is most people probably don't have like 20 bank accounts, but any like professional, sharp, however you want to think about it, sophisticated sports bettor will probably have 10 plus sportsbook accounts, because all these books have different prices. BetMGM has different odds than DraftKings. So it's advantageous to have both books because they have different prices, right? And sometimes there's better bets on BetMGM, sometimes it's DraftKings, sometimes it's FanDuel. So kind of the whole point of OddsJam is just like consolidating all the odds to allow people to, just find value in a data oriented way, because you're just really comparing. Like, it's kind of like you're comparing the same asset price, like Lakers to win tonight, but there's a different price on every single platform. And some platforms can have advantageous odds. If you think about injuries in sports betting, sports books move at different speeds. So let's say LeBron gets injured at practice, he can't play tonight. Books are going to, their models, their lines are going to update at different times. So you can pick off sports books, pretty effectively. It's not like it's a walk in the park type of thing, but the markets are very, obviously, compared to the stock market or even derivatives market, extremely, extremely inefficient.
Got it. So Odds Jam is kind of bringing this data and these insights to gamblers to try to kind of find these inefficiencies, find these arbitrages. So for odds jam, is it essentially then mostly just kind of that, like you said, that aggregating the different lines that you would see on different books, or can you actually then go ahead and place bets on odds jam?
No, you can't place bets directly, so we're not an operator, but, kind of the way it's kind of like, let's say the Nasdaq is up 5% today, maybe you wanna look at, what tech stocks are lagging, that kind of thing. So, I mean, that's not a perfect example, but what OddsJam will do is just show you like, hey, you know, all these books have, let's say, the Warriors at plus 130, but, on FanDuel, they're still offering plus 155, maybe they're stale, whatever, maybe injury news, whatever. In football, it's weather changes cause line movements. So it just kind of points out discrepancies between sports books. And, sometimes some of these bets are profitable or whatever. And, it's kind of like a little Bloomberg terminal for sports bettors, right? It's just
Yeah, I
data.
think that's a good
Yeah.
like analogy. So but like, all right, so this is might sound like a stupid question, but I mean you have, right, so if I see, okay, it's who, the Warriors Lakers played tonight. So if I see the Lakers are say plus 155 on one book and then plus 120 on all the others. And I'm like, "Oh my god, this is a great deal." And I get it at 155, that's great and all, but then like they could still lose, right? So it's finding you the best odds, and then you still got to try to pick the right way.
Yeah, for sure. So it's kind of like, if you think about maybe a market maker, they'll put out quotes, maybe like, yo, this option's, $1 bid, 150 offer. So essentially you like get a sense, okay, like they're letting me buy for a buck, they're selling at 150. So the price is maybe somewhere in the middle, 125. They're making money, market makers make money through a spread. So it's kind of the same for sports books, right? They charge this spread that has a different word in sports betting. It's called the VIG, but they just, they're market makers. Sports books are market makers. So essentially it's like, okay, like an example I kind of give is like, let's say there's some stockbroker who tells you, hey, I'll buy this stock for 10, I'll sell it for 11. That's what the market's saying. And your friend tells you, you want to buy this stock from me at 950, I don't want it. You'd be like, well, that's probably a good trade against my friend. It's not going to happen probably, but like that would be a good
Right.
trade because the market is indicating the price of this stock should be between 10 and 11, maybe 10.50. If all the quotes are, 10 bid, 11 offer, maybe the price is more like 10.50. So if my friend's letting me sell it for 9.50, seems like a good deal type of thing. So it's kind of like that, if that makes sense.
That does.
So if all the books are like plus 120, minus 140, plus 120 for the underdog, minus 140 for the favorite, it's like, okay, there's a 20-cent spread. The fair value is probably somewhere around plus 130, minus 130 for the favored team. So if you can get plus 138, seems like good value compared to the other sports books and the markets they're putting out.
Got it. So backing up real quick, I mean, like, how exactly? Because I've heard different things from different sharps or professional gamblers about like how Vegas sets lines, right? Like some people are like, oh, they're trying to split the public, whatever. Like, what goes into what's your reading on what goes into an odds maker making that line?
Yeah. I mean, I've spoken to at this point, a lot of these people at sports books just being in the industry, but the way they work is, you know, sometimes they'll have risk, on a certain team or side, but in general, I mean, there's a lot of money being bet on DraftKings. So let's say the Warriors are 3-point favorites tonight against the Lakers. Maybe they are, maybe they're 4, I don't know. But if all the action's coming in on the Warriors, I mean, right, books are market makers at the end of the day, just like a regular market maker. So they typically don't want to have huge risk or huge positions. They want to make their spread. They want to buy for 10, sell for 11. So essentially sports betting, of course it's a less efficient market, but in a very similar way to other markets, it's based on supply and demand. If 80% of the money is coming in on the Warriors, I mean, there's a lot of money coming in on the game tonight. Warriors, Lakers, like books will move the line in favor of the Warriors. They're not going to sit there with $50 million worth of risk on one team. And of course, that's not perfect. They're not able to perfectly balance the same way a market maker may end up with, positions that maybe they don't want, or maybe they do want. But they're trying to like, like it was the same thing as a trader. Like if everyone keeps selling to me, that probably indicates like I think that price is a little too high and I'll take down my bid, right? And try to
Yeah.
buy it for
So
less. So
it's almost as if like it's almost like the odds makers themselves aren't making the lines. It's like the public making the line, like based on where the money, or maybe not the public, but where the money is going, will then essentially determine where the line ends up settling.
yeah, so what a lot of books do is when they open odds, let's say for, the MLB games on Wednesday, a lot of sports books, they'll have models with like rough senses of this team is the underdog, rough idea of where the odds should be, but they put it out, but they have lower betting limits at first. Then they'll start to get hit by, let's say, the sharp bettors. But they'll have lower betting limits at first. So then they kind of move their lines. They get a sense of what is roughly the point of indifference. Maybe the Dodgers are, minus 150 favorites or whatever. And then they're kind of balancing flow on both sides. And then they increase their betting limits. That's generally how it works on most of these sports books.
Got it. And then so I don't know if this is a result of like how the casinos or odds makers are setting the odds, or how the public is betting on them, or maybe I guess like a little bit of both. But it seems like a lot of times I'll notice that like if a team, or either like a star player or a star team, right? Like a very popular team, take like the Dallas Cowboys, for example, are playing a team. A lot of times I'll feel like the line is maybe like, say the Cowboys are like minus like 3.5. And I'm like, well, I would have expected that game to be like even. Is that like maybe just because so many people like the Dallas Cowboys that they're betting on them more, and then like, that could like move the line a little bit? Or maybe like a LeBron James led team, like people would be betting like a LeBron James prop, like if his over
Right.
under like seems so high, because it's like, okay, well, most people, right, if they're betting on props, are going to say, okay, I bet LeBron's going to score a lot of points, being like, okay, this might be a little bit higher than it should be, just because you're paying for that name, you're paying like for LeBron James, where if it was another player, it might be like a couple points lower.
Yeah. I mean, it definitely is possible type of thing. I think especially for like NFL. I mean, I'd say for the more active markets, they're pretty efficient. Like it's been shown sportsbook odds like where the line closes is very very accurate. Like very hard to beat long term, let's say like NFL point spreads. Almost nobody can do it. Like if you could only do it on one sports book, it's very difficult. If you're like picking off sports books when they screw up and they're stale, that's different. But like there's basically no one who can just look at point spreads and pick, oh, the Cowboys are winning based on sports knowledge, or like this line's too high, this line's too low. The markets are very efficient. I mean, there's a
So
ton of money
if we
down
looked at like the historical data, it wouldn't come out to be that like,
right.
oh, LeBron was going under on all these, because it was like it's pretty even. You're saying that like the lines are accurate.
And there's a lot of, not a lot, but there's I mean, there's a fair amount, of sharp bettors, syndicates, who kind of if it is true that like I'd say the biggest example that I've heard of is I think it was Mayweather McGregor, that fight. I know a lot of money came in on McGregor, but then the lines close to starting, I think absolutely ripped towards Mayweather. Like I think McGregor at some point was like plus 150 to beat Mayweather in boxing. But as it got closer to game time, I think Floyd's line moved from like minus 150 to minus 500 because
Yeah.
all the sharps ended up like taking advantage of the inefficiencies, and a lot of people, took out a lot of money, placed a lot of bets. Like I'd heard stories at SIG of people betting on that fight and just everyone pounding Mayweather like minus 300 favorite. But I mean, it's definitely yeah, it's definitely possible, but in general the markets are pretty efficient. I forgot what I was going to say, but yeah.
Yeah, so Deuce Parker in the chat saying in the sports book use the alternate line and totals and player points. So I guess this is a good transition to ask you about prize picks. So prize picks is, are you associated with prize picks at all?
Nah.
Oh, you just use, so this is like a certain platform that you use for parlays?
Yeah, I'd say, I mean, obviously on Twitter or in the content, we do. like there's some sports books, for example, I'm in Virginia. There's some sports books that are available in like one state, two states. Like Betway is a sports book in Virginia nobody knows about. So I try to focus on the main platforms.
Got it.
And
So is because
yeah, Prize Picks is very, very popular. It's kind of grown in popularity. And also what's unique about it is it's legal in not every state, but basically every state because it's not technically a sports book. It's classified in the eyes of the law as a fantasy sports website. So they're regulated different because you can't bet
yeah,
straight bets, stuff like that.
well, yeah. Walk me through how Prize Picks is kind of different from other sports books in terms of like what types of bets you're putting out there.
Yeah. So it's just like a legal classification between like a bet and a fantasy, like fantasy companies versus sports books. But I think the way Prize Picks works is like there's no straight bets, right? I can't bet on the Lakers. I also can't just bet on one thing, right? I have to have multiple picks in the same, fantasy entry as they're called on Prize Picks entries. So basically, it's a player prop only platform where you need to have at least two picks, two to like five, and they can't change your payout based on the picks you select. So if you go to a sports book, they may say the Lakers are minus 140, whatever. And they can move that line minus 150, minus 130, and they can offer all different types of point spreads, totals, stuff like that. Whereas on Prize Picks, they're restricted to basically only player props. Everything has to be classified as a player prop, and they can't change like your payouts based on the picks you select. So any five picks you select, you're getting the same payout. Doesn't matter if you take overs, unders, golf picks, baseball picks, hockey picks, whatever. So it's kind of like a fixed sports book in a way. That's the way I view it. Is like they have fixed payouts. Doesn't matter what you select, and that technically is a fantasy sports company. It's not a sports book in the eyes of the law.
Got
So
it. And if you and you found, I guess maybe like inefficiencies isn't the best word, but like this to be a good place to kind of like try to find some opportunities in the gambling market.
yeah, essentially it's very different than a sports book because like what their payouts are for any five picks. So you can basically just take their payouts and back out, okay, what percentage of my picks do I have to win long term to be profitable? And it's just a platform where you're betting over unders. LeBron over under in points. So if you had no advantage, you'd be correct 50% of the time. Like LeBron, he's always going to go over or under. So if I let my mom pick, doesn't know anything about sports, anything about gambling, she'd win 50%, lose 50%. Like the game's always going over or under. LeBron's always going over or under his points line. So it really just boils down to like you have to win a certain percentage of your picks to be profitable. If you don't, which is over 50%, it's like 55%. So you got to be able to hit 55% of your over unders to be profitable. And what Prize Picks assumes is, 99.9% of their clientele can't win 55% of their over unders. It's too hard to beat them.
Yeah, no, that is really interesting because I've seen your tweets about, different like parlays and whatnot on Prize Picks. And I've never myself like actually tried it on there, but it seems like, yeah, that seems like pretty doable. And I know a lot of times people say, don't do parlays. Like that's how, these betting companies make all their money off parlays. What are your thoughts on like outside of Prize Picks, just parlays in general?
Yeah, I'd say like, um, it's probably similar to like a new investor in some ways. And I know it sounds crazy because a lot of people will be like, you can't make money sports betting. It's like you can. But I feel like it's like if someone's just starting out investing, it's like probably the best advice isn't, go crazy with like options, like dive in head first. Maybe some people do that. I don't know. But you got the point is like if they don't really understand stocks, they don't really understand investing, anything about this, like they probably shouldn't be diving into like more complex, more risky, whatever type of things. So I think it's kind of the same for parlays. It's very like, you know, introductory advice like don't place parlays. And for the average person, if they have no idea what they're doing, and I'd say, most people are sports fans, they're not sports bettors. They're sports fans who bet on sports, you know. So most people like don't really understand what's going on, and parlays are a pretty easy way to lose, lose your shirt kind of thing, because you can lose a lot of money doing them. But there's people who make money off them. So it just kind of is, the riskier stuff. It's just more complicated to understand. Like understanding how to make, like, if you can't make money placing bets, regular bets, straight bets, as they're called, you're not going to make money betting on parlays. You're just going to lose even more money.
Yeah, I kind of like to what I like to do is I like to if I'm up, if I'm like playing with house money, right? I'll take like a little bit of that house money and throw like I like to make some like ridiculous parlays, right? Like
Yeah.
like $20-$30 parlay to win like 10 grand, right? With like 8 different picks. And like
Yeah.
honestly, like I've never hit a parlay that big. I've hit a bunch of what was the last one I hit was during March Madness. I hit one that was like $50 to win 1,500. So pretty good, right?
Yeah.
But like I haven't hit one of those like, 20 to win like 10 grand. And I probably won't. But it's honestly like a fun way to have some money out there, have some stake in the game. And that's what I kind of like I almost like about parlays compared to straight bets is like because for me to be invested in a straight bet, I'm not gonna, like get all worked up over like if I have $20 in the Lakers tonight. If I have like 50, 100, 200, maybe, then I'll be like, okay, I have like money on the game. Like I want the Lakers to win. But if I have a same game parlay that's $10 to win 5,000 and a couple of the legs are close, now all of a sudden I'm like really invested in the game for only $10 compared to putting a straight bet out there of like 100. So it's almost like lower risk. With for me, I still get the same entertainment value. Again,
Totally.
as long as the same game parlay, like a few of the legs are starting to trend that way, then I'm feeling good.
Totally. I mean, yeah, it's gambling obviously for everyone should be entertaining as well. Whether you make money or lose money long term, the goal isn't to like put your life savings into it and try to 10x it type of thing. But yeah, I mean, I completely agree with you. It's like buying a stock. It's like, it's like if you love gambling and it's being like, yo, buy and hold this stock for like a year versus like buy this out of the money call for tomorrow. Like there's just different versions of, the same for the same amount of capital deployed, like the sweat you get or however you want to view it.
Yeah,
So it's
no,
interesting.
100%. So Alex, I gotta ask, what's your like all-time favorite sport to bet on?
That's hard. I mean, I love the NBA, but I also do love MMA, UFC. So it's a little
Okay,
more betting on people to get knocked out. It's one-on-one sports also tend to have a lot bigger line movements. Like if you think about a team sport, I mean, it's kind of like a small cap company versus a large cap company. It's just like
interesting. I like that.
yeah. So I feel like the smaller sports you can oftentimes find some good bets, and sometimes it's funny because it'll be like, dang, like pretty sure I made more money betting on that guy to get knocked out than on the guy who got knocked out, how much he got paid by the UFC type of thing to do the fight. So it's just like an
Yeah.
interesting sport. And just being in Vegas, like going to a UFC event and having money on it. I mean, I know, my dad's always like, it's disgusting that you watch people get, but it's like, I don't know, like betting on fights is something I like. So
Yeah, well, that's interesting. I mean, so I actually really like. I got hooked on UFC betting. I remember the first UFC fight I ever bet on was a couple years ago. Stipe versus Ngannou, and I bet on Ngannou to beat him by KO in the second round. I want to say it was like plus 800 or something. Like by method and the round. And like the fight started and Gagne was just like kicking Stipe's ass. And I was like, Stipe, just make it through this first round and then we're good. And he did. He hung on through the first round and then like beginning of second round, boom, and Gagne got him. And I
yeah,
was like, all right, that was really fun. And I haven't done that since. I've like ever since then, I've like, just for fun tried to pick like the method and round. Because I did it that very first time and I haven't been able to do it since. But it's still fun. I like betting on the UFC.
yeah, it's it's one of those sports that, I mean, you're kind of never out of as long as you have a player, right? Like crazy things can happen in the third round and stuff like that. Whereas baseball, I mean, typically after the end of the fifth inning, you got a pretty good sense of which team's going to win the game.
Yeah.
Usually,
Yeah. Real quick, do you ever live bet?
yeah. Live betting, I'll do it. It's just a bit harder because everything moves so quick. Like every change of possession in the NBA. So like typically in between quarters, timeout breaks
Yeah,
is
it goes
really
to commercial.
yeah, is a lot better of a time because if you're trying to do it like while the guy's dribbling and then he misses a three, like that changes the total, that changes the point spread, the money line. So everything just like is a very whippy.
Got it. I'm trying to think if there's anything we haven't covered that I wanted to get to. I think it's been a great conversation. I've
Yeah.
loved learning more about your, a background and B kind of strategy analyze different stuff. I gotta check out Prize Picks for sure. We also coming up in a few weeks here in May we're gonna be hosting a virtual like sports betting event. We're gonna have guys from like FanDuel, DraftKings, all the big players like speaking. I think better with like Jake Paul might be there as well. So it should be interesting. I'll make sure maybe we can get you on like a panel or something.
Yeah. Sounds good. I appreciate the time and this was fun and hopefully people learn a little bit about sports betting and make some money doing it. So
Hell yeah. All right. Well, I'm gonna go ahead and drop your Twitter in the chat, Alex, so people that want to can follow along. You got any picks for your riding tonight basketball game?
I got a ton of player props. I'm on Clay's over and points. I got tons of different things on Prize Picks. Got some stuff on Jordan Poole's over, but no money line yet. I'm excited for the
Oh
Lakers.
yeah, I see you wearing the Kobe hoodie. Are you just a Kobe fan or are you a Lakers fan too?
Kobe fan.
Yeah, hard
Kobe
not
fan.
to be. All right. Well, Alex, thanks again for coming on Benzinga Live. We got to do it again sometime soon. Anytime you have if you have anything crazy in the betting world or the markets or finance that you want to talk about, just hit me up and we can do this again because it's been a great convo.
Absolutely. This was great. I appreciate it. And yeah, thanks so much for your time.
Awesome, man. Well, have a great rest of your Tuesday.
See ya.
All right, guys. That was Alex Monahan. Again, go give him a follow on Twitter there. I didn't realize we went 10 minutes over. I was having such a great convo, as the kids say it. Time flies when you're having fun. So without further ado, going to go ahead and wrap up. We'll be back live tomorrow morning. Well, in this afternoon, but I'll be back live tomorrow morning. Peace and love, y'all.